Good morning everyone. In this video, we will understand the balancing part of the classification process. There are basically two steps under the classification process. First is posting the journal entries to their respective accounts, and second is balancing of different accounts. We have already learned the first step. Now we will move one step ahead. So on the one side we have the journal, on the other side we have the ledger accounts. You have already learned how to post these entries to their respective accounts. So now let's move to the balancing part. So in the step 1, both the debit side and the credit side, both the debit side and the credit sides are the total. Here the sum comes to 2 lakh and it's 80,000 here. Okay, but we will write the largest sum on the both sides. The largest sum is 2 lakh. So I have written it here. Okay, now after totaling, the difference between the debit side and the credit side is taken. So if I subtract 80,000 from the 2 lakh, the difference comes to 1 lakh 20,000. Okay, now the difference amount, that is 1 lakh 20,000, we write balance CD against this difference amount. Okay, so that we can make the total equal. Now the total comes to 2 lakh. Okay, in the next step, this balance CD, it will become the balance BD. Balance CD means balance carried down and balance BD means balance brought down. Yeah, this balance CD will become the balance BD in the next year. It indicates that this account is continued because out of this 2 lakh cash we have utilized only the 80,000. We have the 1 lakh 20,000 remaining and we have transferred it to the next year. So we can say the balancing means where the two sides are total and then the difference between them is taken and the balance CD is written against the difference part. Okay, this balance CD will become the balance PD. Yeah, we just do the balancing only for the assets account and the liabilities account because these two accounts are also continued in the next year, but we don't do the balancing for income account and the expenses account. Don't do balancing for these accounts. Okay, so capital account is a type of liabilities account, so we have also done the balancing for this capital account. Our balance CD will become the balance PD in the next year. We have already done for the cash account. Since wages account is a type of the expense account, we will not write the balance CD here, or CD will not become the BD. We will only write the profit and loss account because all the expenses and the income account will be closed by transferring them to the P&L account. P&L account is a statement of the expenses and income. Thus, all the expenses and income will be transferred to the P&L account at the end of the year. Similarly, with the purchase account, it is also a type of the expense account. You can observe here I have written by P&L account. Yeah, purchase account debit to the cash account by rupees 20,000. Then at the end, we will balance it by writing by profit and loss account. Yes. Next we have the machinery. Don't forget that machinery is a type of the asset account. Asset account debit to the cash account. Here my machinery is increasing. The value of the machinery is going down due to this depreciation, the 10,000 depreciation. So if out of 50,000 I have charged 10,000 depreciation, then the remaining balance is 40,000. So I will write balance CD here 40,000, and next year this balance CD will become balance BD. Means balance carried down will become the balance brought down. In the trial balance, we will write this amount. Next, we have the sales account, that is a type of the income account. So it will again be transferred to the profit and loss account. Next, we have the depreciation account. Yeah, I have posted this entry here. Depreciation account debit to machinery, and then at the end of the year it will be closed down by transferring it to the my penal account. So by penal account rupees 10,000. So if you practice it again and again, then you will observe that all the assets account will have the debit balances and all the liabilities will have the credit balances. We will use this debit balances and the credit balances to prepare the trial balance that we will learn in our next video. So that's all for this video. Thank you